Inflation continues and the recession looms, or may already be here. The Federal Reserve has their work cut out for them, that's for sure. But you might ask, what is worse, inflation or a recession? Really, both are not good. But what is worse? Marshall Clay from the Welsh Group joins us this morning, hopefully in layman's terms, trying to explain what's going to happen here and the steps the Fed's taking. Good to see you this morning.
Yeah, good to see you. Yeah, so the Fed is in a tough spot, right? And they have a dual mandate of maximum employment and price stability. And sometimes those dual mandates are in conflict, which is really what we're seeing right now, right? You've got a dramatically high level of inflation, right? But then at the same time, the Federal Reserve is trying to maintain maximum employment. So what they're likely trying to do is through the raising of interest rates, they're trying to bring, they won't say this, but they're trying to bring up or bring down demand through increase in unemployment. Yeah. So it's one of those things where they're a little bit in conflict here.
But how does raising interest rates, a lot of people don't understand, how does raising interest rates help in their effort to curb inflation?
Yeah, so I've had this question posed to me a bunch, like, why don't we just let inflation run its course? It'll ultimately burn itself out, right? Mm-hmm. I say, well, imagine you're a marathon runner, and imagine you take off in the race in a full sprint. Well, for the first 5 or 10 minutes, it's probably looking okay, right? Mm-hmm. But then you realize you have another couple of hours and you end up crashing. And I think that's the big risk of inflation, is that you let these prices get so out of control that the damage on the back end of this inflationary spiral can be much or way worse than your run-of-the-mill recession. So when people pose that question, I think it's a false question of whether inflation is worse or recession. It's really hyperinflation leading to depression. Is that worse than maybe having a short-term mild recession? So that's where the Federal Reserve.
Our viewers have been reading the definitions of both there, and again, none of them good. So the Fed's been talking about a soft landing, and I think a lot of people just want to know what's going to happen because there's a lot of uncertainty around there.
Yeah, and so I think you're already seeing a little bit of this. The economy is certainly slowing. Whether we're in a recession or not, I guess that's up for debate. The economy is certainly slowing, and I think you and I were talking about this off air, that the Federal Reserve does not have a good track record of creating this soft landing. And so what we're likely to see is a little bit of an increase in unemployment. And I think that it's still up for debate of whether or not we're going to see significant increase in unemployment. But the good news is that there's a tight labor market right now. The Federal Reserve has a little bit of an extra runway than maybe they normally do with the really tight labor situation.
So what should people keep in mind? What should their steps be, whether or not they have a 401k or like they're just wondering about their job? What should they do?
So you and I talk a lot about timeline, and I think that's one of the most important things out there. So if you're on the cusp or you're already in retirement, we talk a lot about having that minimum of 3 years of emergency cash or really safe money in those bonds, fixed income cash type instruments. If you have a longer term time horizon, if you're a younger investor, I think you can take some risk here. I think you can look for opportunities, continue to add money on a month over month basis to those 401ks. You're talking about outside investments, so look for opportunities to get more aggressive for the long term.
When the market's down, you're buying more shares, you're helping yourself in the long run. But absolutely. I think the other message is, don't spend too much if you're close to retirement.
Exactly. I think that's a good rule of thumb for sure. Everybody. Don't frivolously spend, but I think there's a lot of uncertainty out there with how the Federal Reserve is going to need to respond to this situation. So you want to, assume for the worst and then hope for the best.
All right, Marshall Clay with the Welsh Group. We do appreciate it. Thank you.
All right, thank you, Mike.
All right, we got more on the buzz. In fact, some fall flavors.